Hi, we'd like to welcome everyone to today's webinar, The IRS is Coming for You, Taxing Cryptocurrency Transactions. Just a little bit of housekeeping before we get started. Feel free to send in questions as you might have them. You'll see on the control panel, there's a little area to type in questions. We're going to answer as many as we can at the end, but feel free to put them in. And if there's any questions that we don't get a chance to answer, we'll be sure that someone from the panel follows up with you afterwards. So just a little bit about who we have today with us. We have Henry Rinder. Henry is a licensed certified public accountant in New Jersey and New York with more than 30 years of public accounting experience. We also have with us from Smolin Nick Gutzmer. Nick is a licensed certified public accountant in Florida and provides companies and their owners with accounting, tax planning, and compliance, consulting, and business valuation support. And as our special guest today, we have Carlos Ortiz with us. Carlos is an attorney and member of the litigation and white-collar defense teams at McDermott, Will, and Emery, and he focuses in particular on white-collar defense and investigations. He uses his prominent 15-year background as a high-level federal prosecutor to assist his clients. With that, I will pass it over to Henry to get us started.
Thank you, Amanda, and welcome everyone. I'm delighted to have Carlos and Nick on this panel. Nick, as soon as Bitcoin became a investment opportunity, was one of the first people I knew that really got into it in terms of opportunities and what role it should play in his portfolio. And he was tracking it the whole time, and he's also really a go-to technical CPA at our firm. And then Carlos, surely you will see in a moment how much experience and knowledge he brings to the table. He's had extensive experience as a prosecutor for the IRS and has direct connections with some of the top professionals within the Treasury and the Internal Revenue Service. So the agenda will cover basically the area of digital currencies and what's happening in terms of IRS addressing transactions involving cryptocurrencies and what you should be aware of. I personally have run into people who have transacted in crypto, who have made lots of money, and they were under the impression that none of those transactions needed to be reported. And surprisingly to them, when I told them they should talk to tax advisors or talk to people in my firm, they didn't realize the amount of extensive reporting compliance that is required by the law today. So without any further ado, I'm going to turn over to Carlos with the next slide for him to tee off on the topic. Carlos?
Hey, Henry, thank you so much. And thank you for inviting me to be part of this discussion today. And I look forward to sharing any information I can. And also, Nick, I look forward to working with you. You really are an expert in this area, and it's really interesting, and I'm looking forward to discussing this topic with you. And Henry, what you say is absolutely correct. I've been writing articles and been following the enforcement of the IRS and the Department of Justice Tax Division in this area. And this is an area that it's new. This virtual currency, crypto, whatever folks are comfortable calling it, is a relatively new form of currency, but it's here to stay. And, with that, there's a lot of folks who have been struggling with, the taxation and, how it works. And the IRS is over the last, I would say 5-6 years, has recognized that, there is a significant compliance tax reporting issue. Obviously this occurs over the internet, so there's a certain level of anonymity that is associated with virtual currency. And when you look at this, I like to think of it as sort of what was out there, and the IRS does as well, with the Swiss banks many years ago. And you can analyze, and we can make the analogy to what happened with, the Swiss banks, when I think many folks thought that, well, if I have money offshore, the IRS is not going to find it. And, I don't necessarily have to report it. And there are certainly those, who have that sentiment. And there are also those who are just not sure about the reporting requirements. But the IRS is very much aware of this, and starting in 2017, they have made significant efforts to find folks who are not reporting virtual currency. And I would say now in the year 2021, as we close out the year, they have really improved their efforts to trace, find, and are now looking after folks who have not been reporting it. One of the most significant, I would say, talking to a federal prosecutor in the Southern District of New York, what he called the game changer in prosecuting, tax evasion and criminal tax is the reporting line on the front of the 1040. Right underneath your name and social security number is the question: at any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Yes or no? So now with that question right there on the very top, it's going to be very hard for anybody to claim in the future, I did not know that I had to report a virtual currency transaction. And folks who have not reported this in the past, and we'll talk about this more later, obviously with Henry and Nick, now have to make that, you have to now say, and you have to check that box. It's like did you have a foreign currency account? And if you haven't reported it in the past, you really have to, there's a difficult decision about whether I amend the returns. Do I do a voluntary disclosure? And as of now, the IRS has not put in place a voluntary disclosure program for those who have not done that. So starting in 2017, 2018, the IRS has put in place a lot of measures to come after this. And before I jump into this slide here, even as recently as 2 weeks ago, one of the biggest IRS criminal investigation offices in Los Angeles, the special agent in charge, made the following statement about virtual currency. It's one of our top priorities. We're really looking at cryptocurrency from several different perspectives. Obviously, number one being tax crimes. He said, is looking into a taxpayer's intent to hide assets or using cryptocurrencies, whether some sort of legitimate purpose. The CI division is skilled at evaluating differences between a misunderstanding of law and a willful intent to evade taxes. In a recent statistic in August, said that out of 150 cyber crimes in their inventory, about 90 of those were directly related to cryptocurrencies. And as of fiscal year, that point in fiscal year 21, $3.5 billion in seizures were related to crypto crimes. The IRS is getting very good at this. All of their criminal investigation agents are now trained in cryptocurrency and following money in cryptocurrency. They're hiring more agents. And the IRS Criminal Investigation Agency recently changed its logo to show that they are becoming much more adept at virtual transactions. So obviously the IRS, they need a name for any kind of project that they do. And in March, they came up with Operation Hidden Treasure. And this is basically, they're combining their fraud enforcement folks with their criminal enforcement agents to what they say root out tax evasion with cryptocurrency. And as this slide shows, they're training folks. Every IRS agent now knows how to follow this money. And again, it's something they're taking very seriously and something that they've become very, very good at doing. So let's go to the next slide, please. So obviously, a very significant IRS enforcement tool is the John Doe summons. These happened in Swiss banks. And what a John Doe summons enables the IRS to do is to go to a bank, or in this case, to a virtual currency exchange. And just very quickly, a virtual currency exchange is where, folks can go to exchange virtual currency for, fiat for money. And actually, Nick, do you want to jump in and give a quick update on what a virtual currency exchange is in a couple of minutes?
No problem, Carlos. So really, kind of the most popular one that everyone will be most familiar with is Coinbase. Kraken is another popular one out there, but really, what happens is you can purchase Bitcoin, Ethereum, or these other currencies out there, and either you can hold them for appreciation, or you can exchange them. So let's say you bought Bitcoin, but now you want Ethereum, or as everyone may want one of the meme coins that just came out. You can then kind of convert that cryptocurrency that you purchased and get this other type of cryptocurrency out there. And that's really how most people are accessing these markets, whether it's Coinbase or some of the like. So
thanks, Nick. I appreciate it. And I like to think of Ethereum as something that you can get at the Star Wars cantina. So something else. But so the IRS recognizing that if you're looking for folks who are exchanging and dealing in virtual currency, one of the best places to find individuals is at a virtual currency exchange. And in 2017, they issued a John Doe summons to Coinbase, as Nick just mentioned, one of the biggest virtual currency exchanges in the United States. And through that, they obtained information on basically account holders there who engaged in transactions totaling more than $20,000, which is really not a whole lot of money, and obtained information. The number of folks escapes me now, but I think it was 18,000 or a certain number of taxpayers. And what a John Doe summons, you actually have to get that approved by a court because it really, instead of targeting a specific person who you think may be evading taxes, this enables the IRS to just go in and just get on a whole bunch of potential folks just because they think there's a need to get it. And so it is pretty powerful tool the IRS can use. And with that, they now had all of this information on potential folks who were not reporting virtual currency transactions. And that resulted in 2019 with the IRS issuing what you call the 10,000 letters to taxpayers. And with that, these letters, there were 3 different types of letters that they sent out. And basically, anybody who received one of these letters, and the one letter, the most severe letter, informed someone that we're aware you engaged in a virtual currency transaction. It's not on your tax return. You need to contact us before we take more severe actions. But anybody who received one of these, it pretty much meant that the IRS was aware that you didn't report a significant transaction. So that was the IRS's first efforts. And in 2020, they continued. They issued what they call source of work notices to experts in the virtual currency world to help them begin to analyze all of this data they were getting, not only from the United States, but from global resources regarding folks who were not, who were engaged in this virtual currency world. And 2021 was a big year for the IRS in that they actually issued 2 of these John Doe summonses, as Nick mentioned, to Kraken, another major currency exchange, as well as to Polynex, or the Circle, John Doe summons at the beginning of this year. So now you can imagine the IRS now has a much bigger database, and they're letting the world know that they have this. The IRS also fought back an effort by a taxpayer, Harper, to fight the use of this information, and that was obtained in a John Doe summons. So they are building up a steady stream of this information. They have it. And actually, if we could go to the next slide, please. The IRS was ordered in Kraken by the district court to file a response explaining why they needed to get the John Doe summons. Because in the original Coinbase John Doe summons, they really just wanted limited information. But in Kraken, they asked for a whole lot more detail. They wanted account holders' telephone numbers, email addresses. And in this response, they really laid out why this information was more critical. But also in this response, it detailed how the IRS has gotten much more sophisticated in tracing this money, and finding this and using data from all around the world. So it really shows that they're out there, they're matching IP addresses from people, and they've really become much, much more sophisticated at doing this. So it tells you that they are really cracking down. And as I mentioned at the beginning, they are now really looking at this. They've been trying to educate people and provide guidance, which Nick will talk about, try to help folks about how to report virtual currency, what you need to do. But between gathering information and now making it much more clear on the 1040 that you need to report this, they are now to the point where they're going to start prosecuting folks for tax evasion, failure to report on a tax return, filing a false return. And that's their next step in this process. So if we can go to the next slide, please. When you talk about global, and obviously as the world gets smaller, as the Swiss bank case showed, the IRS and the Department of Justice, I think if anybody had asked 10 years ago, was the IRS going to reach settlement deals at the Department of Justice with 80 Swiss banks, I think everybody would have said that's impossible, right? Who's going to think that? But they did. And now the IRS and the Department of Justice are not shy about prosecuting individuals globally. And folks, money moves internationally. And recognizing that, in June of 2019, or earlier, the IRS decided to join forces with 4 other their tax enforcement agencies from Australia, Canada, and the UK and the Netherlands. And they formed the J5. With all due respect to the Jackson 5. But what they did is, for the first time, you really had a cross-border group of really elite agencies that were formed to share information, share ideas, and really now get together to attack, international tax evasion. And what these guys do is, if you go to the next slide, please. They actually issue challenges to themselves. They come up with what they call challenges. And one of these challenges that they issued was fintech and cryptocurrency. And they will make this an issue and then start working together. And over the years, they've actually made cases. And we did a panel I think it was in June, we put together a panel with some of the leading law enforcement, including one of the top IRS criminal investigation agents, in leading the prosecution efforts in virtual currency, and also one of the leading tax prosecutors from the Southern District of New York. And they talked about how efficient and effective this group is at really sharing information. I was a federal prosecutor back 16 years ago, and I can tell you, they were not very good about sharing information. It was really a challenge. But law enforcement is really now collaborating much better. So information from the Netherlands, from the UK, and also now with FACTA, which is another global way of sharing financial information, has really changed it. And now the IRS is in possession of a global body of data that they are working with industry and developing contracts with industry to analyze it quickly, to initially prosecute international tax evasion. And the J5 is an example of how that is working efficiently. So this whole, virtual currency, the IRS is really leading the charge in enforcement. And as Perry Carbone from the Southern District said, that line on the 1040 is really a game changer. And I think you're going to start seeing a lot of this And taxpayers really need to take a look back now on prior transactions, how to handle those, whether there's a disclosure amending returns, but also going forward and how to deal with those. So let's go to the next slide, and I'll ask Nick if you could maybe talk to us about the guidance that's come out and what the IRS has sort of advised folks on how to deal with this new Star Wars type currency.
Yeah, thanks, Carlos. I mean, to what you've just kind of touched on for the last 20 minutes now is it's really becoming a key focus of not only the IRS, but also, the global standard here as, countries don't want to be losing out on revenue based on this, digital technology. And many of the systems weren't set up to properly, regulate this stuff. So in 2014, the IRS first came out with Notice 2014-21. This was really their first stab at issuing guidance as to how they, intend to treat cryptocurrencies and, help provide taxpayers with what they need to know. And in this notice, probably the most significant part of it was that the IRS came out and said that they see crypto and virtual currencies as property, not a traditional currency, even though in the name it has currency. And it's if you haven't noticed it yet, that could be changing too, unfortunately. In September of 2021, El Salvador decided that they were going to recognize Bitcoin as legal tender, and I think they even made it the country's currency there. So it's interesting as we see this evolving quite quickly. Guidance that was issued in 2014 probably seems a little stale at this point, as the digital nature of all this really moves quickly. But in this notice, they also provided guidance for determining, basis and recognition of gains and losses, and they address certain situations, whether you purchase the currency, you're exchanging it for one currency to another, or you receive them by gift. And then additionally, not only do we have investors or people that kind of purchase these cryptocurrencies for speculation, we also have those individuals that make the cryptocurrency work, and they're called miners. In Bitcoin, you have these miners that provide what is called proof of work, and that's kind of how the currency works. So they have these computer devices that prove that the blockchain is working, and they verify the transactions, and they earn cryptocurrency by providing that proof of work. So the IRS also provides guidance here in this notice as to how to recognize income and expenses, reporting requirements for trade and businesses, and things of that nature. So we now go about 5 years now down the road, and then the IRS publishes Revenue Ruling 2019-24. And in this notice, they're addressing two major areas of cryptocurrency, so forks and airdrops. There's two major kinds of forks, a hard fork and a soft fork. The simple difference is it's kind of a change in the network protocol, where a hard fork is changing that network protocol to then make the previous network not compatible with the new network. And then a soft fork would be where that both are supposed to kind of work together after this fork. And in the revenue ruling, the IRS states that in the situation of a fork, you are only supposed to recognize income if you receive a new currency. Well, in hard forks, there can or cannot be a new currency issued. The most popular hard fork is going to be Bitcoin Cash. And when this hard fork happened, holders of Bitcoin received the new currency Bitcoin Cash just for holding Bitcoin. So at that time, they would have to recognize income for that fork that they received. Another area that they touched on was the airdrop. Airdrops are kind of almost like free money in a sense, where just because you are a holder of one cryptocurrency, they'll give you either this new cryptocurrency or even like new Ethereum coins, things like that. If you hold Ethereum, they may give you this new currency that came out just to boost up that cryptocurrency just starting out. And similar, as long as you are getting a new currency, the IRS says you have a recognition of ordinary income on that event when you receive the cryptocurrency. Now, what value may you use to determine what your income is? And they state that it is the the value at the time that you receive the coin. So, if it's 10 cents a coin, you would have, if you had 100 shares, that would be, 100 times 10, and that would be your ordinary income that you would recognize on the tax return. And then probably the most prominent recent guidance that the IRS issued and has continually updated here along the way is the frequently asked questions on the IRS's website. And they first posted it in 2019. There was a subsequent update in 2019, and then most recently another update in 2021. And on this frequently asked questions, they pretty much address a significant amount of activity that you may have when you hold cryptocurrencies. How to calculate gains and losses, what happens if you're using cryptocurrency for payments of goods and services, what if you're a business that accepts cryptocurrency for payments of goods and services, if employees want to get paid in cryptocurrency, what kind of reporting requirements do you have there, how to report your gains and losses, whether they go on the 8949 Schedule D situation, or if you're, for a business perspective, you might need to recognize that on Schedule C. And then also with many individuals making large gains in these cryptocurrencies and it being an appreciated asset, it's a prime opportunity to donate these coins. If you bought Bitcoin way back in the day and maybe you paid $100 a coin or $1,000, $5,000 a coin, and now we're at 60,000 plus, and that could be a good way for you to make a charitable donation and not have to shell out the complete cash for that donation. So the IRS is continually trying to stay relevant in this area. Obviously, it is the IRS, so things do move slowly, and especially with COVID recently, it has probably slowed down their efforts, significantly. But as we move out of this COVID world, I could definitely see the IRS coming through to provide, more guidance and also more enforcement efforts there. So, Amanda, if we could go to the next slide, please. So with that being said, we've touched on it a little bit, and Carlos touched on it as well. In 2020, they revised the cryptocurrency question on page 1 of the 1040. They kind of made it right there and prominent, and as Carlos was indicating, it's pretty hard to ignore at this point. And by willingly answering that question, you're setting yourself up for a world of pain when you get caught. They do have Form 14457 so that you could voluntarily disclose the fact that you may have committed a tax crime, and then it was willful in nature. And by doing this, you can seek protection from potential criminal prosecution. I mean, in the end, you're going to be, it's better to become voluntary, put yourself out there voluntarily than to get caught. And obviously, first and foremost, the way to avoid that is to report your activity as it incurs. But going on to that yes or no question, as Carlos indicated it, they say, receive, sell, send, exchange, or otherwise acquire. By putting that otherwise acquire at the end of this, they pretty much threw out the fishing net to catch everyone. They made it hard for you not to say yes in the simplest way. But they did issue some guidance in the frequently asked questions that state a couple situations where you may not have to answer yes on this question. Most commonly is if you buy a Bitcoin in 2019, let's say you just buy it on Coinbase and then you do nothing but hold it for appreciation. Well, at this point, you have not completed another activity that would require you to mark yes in 2020, as long as you didn't sell it or transfer it or something like that. Additionally, if you transfer your coin from one wallet to another, that is not considered to be, an activity that would require you to check yes. So you buy a Bitcoin on Coinbase, maybe you don't trust Coinbase and you want to move it to either a hardware wallet or a paper wallet, something like that, to get it off of the exchange. That is an activity that would not require you to answer yes. And then the third one that I want to touch on is they stated that if you purchase cryptocurrency with real currency, you're not required to answer yes. So I interpret that as, if you take US dollars, you buy yourself a Bitcoin, that would be an activity that also would allow you to say no on that question, which seems counterintuitive because it would be acquiring a financial interest at that point. But they are providing guidance as much as they can, and we'll hopefully start to see more guidance as they are giving more resources to fight these areas. And now, not only to rely on the taxpayers, they are putting more reporting requirements on the brokers and exchanges. As Carlos identified, they did that John Doe summon to try to get everyone that was reporting $20,000 or more. Well, now Coinbase started issuing Form 1099-K to report gross payments to customers that had more than $20,000 in transactions or more than 200 transactions. So, and cryptocurrency exchanges have followed in these footsteps with issuing 1099-Ks. And what that does is, yes, Carlos?
No, so go ahead, Nick. Before you finish, I want to touch on
no problem.
industry. But please finish, and then I'll jump on that.
Yeah, so these forms, what they do is they put it out there for the IRS to know that these events are occurring, and ultimately have to have the taxpayers report these activities. But once they know, they can investigate further to kind of see what you are or may not be hiding. And Carlos, go ahead, step on in before I kind of take it to another level there.
No, thanks, Nick. And one other thing too, when you're talking about if you have clients or if you're in the industry, when the Department of Justice considers looking at or prosecuting a company or partnership or someone who's what they call a facilitator or someone who's involved in the actual industry, what they do, and you could go on with this for a long period of time, but just very quickly, they will look at your compliance and did you the folks who work in the industry, did they try to have good compliance and make sure that they are not helping taxpayers evade taxes in that regard? And they issued last year updates to their what they consider to be good compliance programs. And one of the things you have to do is you have to look at what are the risks that your industry deals with. And in this same panel we did in June, the representative from the U.S. Attorney's Office did say that the risk of using your company for tax evasion is a risk that you have to consider if you're in this industry. And if they, for example, they interview taxpayers or find that taxpayers were using your exchange or whatever you do in this industry and as a means to evade taxes, and you didn't put in place good compliance or some means to avoid it, that your company or whatever you are could be looked at for prosecution for not having proper compliance in place. So that's something you really have to take a look at when you're doing these things. That was that was an opinion something he said straight out. So it's something to take a look at and make sure. And by a way of doing that, for example, is if you have someone in sales or someone who's saying, look, we don't report this to the IRS. This is because folks are out there actually doing that, and you just need to make sure that you're not being used or anybody could think that that's happening. So
yeah, definitely a good point, Carlos. I mean, we see this kind of the old-fashioned way of this is, oh, you pay in cash, we'll give you a discount. This is just a new version of cash situation right here, kind of not traceable or at least less traceable from the IRS's perspective. So
right.
to kind of build upon that, when you have to report these activities, it can be quite cumbersome because it's not like a stock or anything like that where these brokers are kind of recording the prices for you, and they may not even have the prices for you. If you bought a Bitcoin, a long time ago, it was sitting in a paper wallet, hardware wallet, and you transferred it to the exchange, you're not going to have that basis for you. So even as we try to move forward in the industry reporting standards of these brokers, and ideally they want to get to a point where these brokers are reporting the activity on 1099-Bs similar to the way stocks are reported now. The biggest problem is going to be basis reporting. These brokers won't have your basis. And it's very flexible, whether you use FIFO, LIFO, or specific identification on these transactions, the broker may not know what Bitcoin you're selling or what part of the Ethereum that you've purchased historically you're selling. So there are services out there that can help you calculate these gains and losses and kind of go back to finding out the proper basis, because these markets trade 24/7. Prices are constantly changing dramatically, where you could have 20-30% gains in one day. So the basis part of this is going to be crucial for taxpayers to nail down. Services like CoinTracker.io, and there's a couple of other ones out there that can help you put together a tax package for your accountants to utilize and help you stay on the right path. Other reporting requirements that could be on the horizon. Currently, there is no FBAR reporting requirement at this time, but according to IRS Notice 2020-2, FinCEN is looking at making this considered to be a financial instrument that would have to be reported for the FBAR reporting of foreign assets. Additionally, there currently is no requirement on the FACTA reporting, so that's the 8938 form of your tax return. But best practice is that if you do meet these thresholds for reporting, you should be including them. And this could be if a partnership that you own a piece of owns cryptocurrency, you may need to consider this. If you utilize non-domestic brokers, Coinbase here is SEC registered, but maybe you're using Binance or one of the other many exchanges that are international. So definitely a lot of reporting requirements to consider, and by working with a tax advisor, you can at least mitigate these areas and make sure that you're getting to report what you need to report. And as Carlos was saying, you can kind of prove that listen, we are trying to be upfront. We are trying to report everything that we believe we should be reporting. As things change, you're just putting out good faith. So man, if we go to the next slide, please. So what's going to be changing now? President Biden is in one of the bills. They are putting on a full court press to provide more funds to help enforce cryptocurrencies. They want to reduce the reporting threshold to $600, down from $20,000 for these 1099-K reportings. Also, they want to put a requirement on the brokers and businesses that if you transfer greater than $10,000 in value from one broker to another, or one wallet to another at a different broker, there is a reporting requirement on their end. Additionally, if businesses receive more than $10,000 for payments of services or goods, there would be a reporting requirement there. So in order for the IRS to kind of catch everyone, or at least enhance their ability to catch taxpayers that are committing tax evasion, tax fraud, they are putting this out to everyone to kind of make it a team effort here. They realize they can't do it on their own, so they are helping, or they're getting help from other areas to kind of provide them with more information to track down these individuals. And as Carlos touched on the J5, they are working to they're working to enhance the U.S. participation in these reporting standards across for many global countries. At the end of 2018, there was 102 countries that were committed to ensuring an effective exchange of information relating to this. There's 49 countries in 2017. An additional 53 countries came about in 2018. So as we can see, there are more countries coming on board, more countries making this a priority. And it's only going to continue to grow as it becomes larger and larger. Henry touched on me being the first person kind of that got started, and that was only in 2018. It came up at Thanksgiving dinner that night, and my cousin kind of brought it up, and that was the big bull run up in 2019. I got to hang on for the ride, but now it's been a few more Thanksgivings later, and it always comes up. We kind of touch base on it, and it's just continuing to grow. So with that being said, the government is getting on board as well and putting significant resources behind that. And even the Treasury is requesting stricter oversight of these stable coins. So one of them that comes to mind is like the Binance Buck. All these coins are supposed to maintain a value of $1. But are these coins properly reserved? I mean, do these coin companies or these people that created these coins, do they have, $1 put aside for every coin they sell at $1? There's no regulations yet to determine that. So they could be underfunded, and who knows what happens. And in addition, yeah.
Sorry. I was going to add one thing, because I know we just want to go to, if we have a couple of minutes even for questions, but just one thing that is obviously, top of mind is that came out of this statement the other day, that the IRS is actually using a system by a company called Palantir Technologies, Inc. that they said enables personnel in every agency unit to call vast quantities of data from both internal and external sources into a single unified research platform. So they're using, again, outsourced technology, because you look at it, how's the IRS going to put all of this stuff together and do it, right? But this is something, so they're actually going outside so they can put this into there, and they're using this into their cybercrime units. And they mentioned, this CI person said, this is one way data analytics is being used to identify non-filers who have significant virtual currency activity by comparing data received from all of these various places and putting it together and doing it. So they're gathering from all over. So these things that they're gathering and that they're doing, they're actually outsourcing platforms from companies to put it together, and then they're putting it in a way they can analyze quickly to go after folks. So, but maybe with that, guys, maybe we could just, I know, Henry, I don't know if you have a couple quick questions or folks have sent in questions, because I know we're coming up on 5 minutes left.
Absolutely. Sorry, so Amanda, maybe we can switch over to the next slide, which I think it might be the Q&A slide. Yeah.
Yep.
So, I actually obviously have run into issues, and I have a question for both of you. And that's my area of expertise has to do with security, and I oversee IT. And one of the areas that we come across quite often is the issue of ransomware and phishing attacks, fraudulent phishing attacks on clients. And I know that for example, ransomware attacks, it is most often that the attacker, the fraudster that is using ransomware to request payment, the payments are actually most often requested in Bitcoin. And so when a client or a target of the ransomware attack actually purchases Bitcoin and pays the attacker to get the code back, presumably, in my mind, that's a reportable transaction as far as that 1040 entry is concerned. I mean, am I correct in saying that?
Yeah, Henry, I would agree with your statement there, and the reason that I would agree with that is when you think of partnership ownerships, situations where if the partnership owns a partnership that may be foreign in nature, they have to provide you with information regarding their ownership, and then you may have to report it depending upon the reporting thresholds. So I think it would be definitely conservative and wise in nature for the taxpayer that has a situation like that to check yes. Now, if you are a minority partner in some partnership or something like that where you're not as involved in the day-to-day and this doesn't come up to you as an event that occurred and you answer no, I think you may have an avenue to kind of show that it wasn't willful, that you may have answered that question incorrectly.
So the other question that comes to mind is when people transact on these internet shopping sites, Amazon comes to mind, and I know for a fact that when you return goods to Amazon, they give you an option And the option is, do you want to get a credit on your credit card? Do you want to get a refund? Or do you want to deposit this money with Amazon currency for future transactions? And this Amazon, currency, I'm not sure what it is, but I guess it's just a credit into your account. And how does that fit in with virtual currency characteristics as far as Treasury and Internal Revenue Service is concerned?
Yeah, no problem, Henry. So I think at this point in time, it's probably considered more of like a gift card situation. But as these companies start to evolve and develop their own specific cryptocurrencies, they could also, that could change. As the virtual currency market is now, they treat it as property from the IRS's perspective, and I don't know that they've addressed this situation explicitly. When companies kind of give you this refund and they don't actually give it to you. But to me, it sounds more of like a gift card, like a virtual gift card situation that has not been expanded into.
I would agree with Nick on that.
Sorry, Carlos, please.
Oh, no, I said I agree with Nick. I think that makes sense.
Amanda, I'm sure we might have some questions from the audience, so I'll turn over to you for a couple questions, and then we'll wrap it up. And the questions that will not be answered because of our limited time, we'll send them over to Carlos and Nick and have them answer those questions directly to the person who was asking it. Amanda, what kind of questions do you have?
Yes, I think the big question is when the IRS is going to start prosecuting. I know there's no crystal ball, but with all of the subpoenas that they've had and everything that they've done, have there been any instances of them actually prosecuting yet, or is this more of a setup for what's to come?
Sure. I think that right now they are, criminal tax cases take a little while to work through the system, but I think that they're actually in the system right now. And so what you have seen in the past is these cases sort of being add-ons to, maybe a fraud case or as a money laundering case. But my understanding, and again, I've spoken with, the IRS guys and some of the folks, and even the Olga, and Olga's last name escapes me, but she is the criminal tax coordinator for the Southern District. And again, the expectation is, you need willfulness, you need violations. So the expectation is that you will see, more tax evasion, false returns charges coming, because that line on the tax return now will make it easier for the IRS to say, well, you knew you had to report this. So the expectation is these cases are now in the pipeline, and I think you'll start seeing these cases within the next year or so. So, but the good news, for now at least in that regard, is there's time, right? So to the extent that you've had this issue or you have clients who've had this issue, to what Nick mentioned about a voluntary disclosure or, or maybe resolving the issue through the IRS, there's still time to resolve it, to get in and take a look at this. And, voluntary disclosure is a pretty hefty penalty and fine and all of that. So there's other means available. And that's what we do. That's where we come in and we work with, experts like Nick and Henry and folks to do that. So, I spent 5 years in the tax division, dealing with those issues, and then 10 years in the U.S. Attorney's Office. So we know these folks and we know all the people involved. So right now is the time, there's still time to deal with these issues and get out in front of it.
Yeah, and to build upon that, Carlos, I think if you have these issues and you've identified them, just be upfront with it. The IRS is going to appreciate the goodwill or the you being upfront, trying to solve the problem before they find out about it. So really kind of getting ahead of that curve will help you show that, you weren't trying to be willful and neglect your requirements,
You don't want to get one of those letters. I mean, the Coinbase John Doe summons resulted in 10,000 letters. Now they've done 10. Now they did the Polynex and Kraken. those letters are coming. And one of the things that the IRS leading agent, Gary Alford, said was, you can expect more John Doe summonses. We're getting smarter. And, he up but said, in fact, I was the moderator. I asked him, can we expect more of these? And he said, yeah. He up but said, yeah, that's a tactic we are going to be using more of. So,
and Carlos, you mentioned the IRS pretty awesome seizure authority, which most people are not aware of. The ability of the IRS to basically freeze all the accounts on a person they suspect, and maybe you should actually spend a minute on what that authority is, because although I know it exists and I know the intricate sides of it, but I don't necessarily I cannot probably articulate the legal standard, but I know IRS has that authority and it's discretionary. So can you speak to it for a second?
Yeah, sure. I mean, they do have that, and you're absolutely right, Henry. That's a very powerful tool they have. For seizures through money laundering, because the IRS also does money laundering and investigations, and and they have a very strong ability to freeze money off overseas, and they work well, especially with the Swiss and other countries, and they are very fast, very efficient, and they are able to trace funds, follow money. I forget that I think the most recent example was in the oil thing recently, where they wanted to be paid in virtual currency, and the IRS was able to recover that. So yeah, it doesn't the lower standard to be able to go in and freeze assets, not necessarily seize, but freeze it, and then from there you have to go in and prove the money was not for for criminal use or for other things, or so it's a much lower burden for the IRS to be able to do that as opposed to a criminal case. So it's a tool they use because grabbing money is obviously a very powerful weapon that they have in their arsenal.
Let's take one more question, Amanda, and we'll wrap it up.
Yeah, so the question was that, you had mentioned a little bit about keeping records and things like that. For someone that is thinking about getting into cryptocurrency, what kind of records should they be keeping? And is this something they should just tell their accountant out of the gate, hey, I'm thinking about buying this, so it's on their radar?
Yeah, I definitely think being upfront with your accountant is a good start. They can help you identify the proper records, but it's going to be very similar to a stock that you would buy and sell, right? So whether it's using, I would personally recommend using one of these services if you are going to get into, doing a lot of transactions, just because the trading of these items are 24/7. It becomes very complicated, especially if you're buying, a hundredth of a Bitcoin or something like that. It's not as simple as just getting, the stock price per se. And there could be lots of transactions. So these sites will allow you to kind of input your wallet address. They'll track the history and kind of give you everything you need to have to report your transactions for your personal tax return. It's not something that you can do on an Excel if you start to get to any kind of increased levels.
Thank you, Nick. Thank you, Carlos. And I wanted to thank those who are participating and attending today. Amanda, thank you for hosting. This was a terrific presentation. A bit scary for people who have transacted, I'm sure, and now need to face up to it. But you still have time, and you should take advantage of it. With that, have a good day, everyone.
Thanks, everyone. Appreciate it.
Have a good day.